Here's a question that keeps millions of people up at night. Should I invest in real estate or cryptocurrency? And here's the frustrating part. Everyone online seems absolutely certain about their answer, but they all say completely different things. Real estate gurus tell you crypto is a scam. Crypto enthusiasts say real estate is for dinosaurs. Meanwhile, you're stuck in the middle trying to figure out where your hard-earned money should actually go. So today, we're settling this debate once and for all. No hype, no BS, just pure facts, numbers, and logic. By the end of this video, you'll know exactly which investment makes sense for your situation, not some random person on the internet. Because here's the truth. There is a right answer, but it depends entirely on who you are and what you're trying to achieve. Let's start with something that might shock you. I'm going to show you the real numbers behind both investments, and I promise you, they're not what most people think. But before we dive in, hit that subscribe button because we break down complex money topics like this every single week. And trust me, you don't want to miss what's coming. All right, let's talk about real estate first because it's the oldest trick in the wealth building book. Your parents probably told you to buy property. Your grandparents definitely did. And you know what? They weren't completely wrong. But they also didn't have the full picture. Here's what real estate actually gives you. First, it's tangible. You can touch it, see it, live in it. There's something psychologically comforting about owning a physical asset. Second, it generates rental income. Buy a property, rent it out, collect checks every month. Sounds simple, right? Third, it appreciates over time. Historically, real estate in good locations has increased in value. And fourth, you get massive tax benefits that most people don't even know about. Let's put some real numbers on this. Say you buy a rental property for $300,000. You put down 20%, that's $60,000 of your own money. The rest is borrowed from the bank. Let's say you rent it out for $2,000 per month. After paying the mortgage, property taxes, insurance, maintenance, and vacancy costs, you might clear about $400 per month in actual profit. That's $4,800 per year. Now, here's where it gets interesting. That $4,800 represents a 10% return on your $60,000 investment. That's actually pretty good. But wait, there's more. The property is also appreciating. If it goes up just 3% per year, that's $9,000 in equity gain. Plus, your tenants are paying down your mortgage principal, which might be another $6,000 per year. Add it all up, and you're looking at roughly $20,000 per year in total returns on a $60,000 investment. That's a 33% annual return. Sounds incredible, right? Well, hold on, because I just painted the absolute best case scenario. Let me show you what real estate actually looks like in the real world. First, that $400 per month profit, it assumes zero major repairs. But what happens when the roof needs replacing? That's $15,000. Water heater dies? $3,000. Foundation issues? Could be $50,000 or more. One major repair can wipe out years of profit instantly. Second, tenants. Oh boy, tenants. Good tenants are amazing. Bad tenants are a nightmare that cost you thousands. I'm talking about people who don't pay rent, destroy your property, and then you have to legally evict them, which takes months and costs thousands in legal fees. During that time, you're still paying the mortgage. Third, liquidity. This is huge and almost nobody talks about it. If you need your money back quickly, you're in trouble. Selling a house takes months, sometimes over a year in a slow market. You can't just sell half a bedroom if you need $10,000. You're locked in. Fourth, location risk. Your entire investment depends on one specific location. If that neighborhood goes downhill, if a major employer leaves town, if crime increases, your investment tanks. You've put all your eggs in one very specific, very immobile basket. And fifth, time and effort. Real estate is not passive income, no matter what those courses on Instagram tell you. Even with a property manager, you're dealing with decisions, problems, and constant maintenance. It's a part-time job. But here's what I really want you to understand about real estate. It's not the returns that make people wealthy. It's the forced savings and leverage. When you own rental property, you can't easily pull money out and spend it. The mortgage forces you to save. Now let's talk about cryptocurrency, because this is where things get wild, and I mean wild in both good and bad ways. Cryptocurrency is the complete opposite of real estate in almost every way. It's digital, not physical. It's incredibly volatile, not stable. It's brand new, not centuries old. And it divides people into two camps, those who think it's the future of money and those who think it's a complete scam. Here's what you actually need to know. Bitcoin, the first and largest cryptocurrency, was created in 2009. Since then, it's gone from being worth essentially nothing to reaching over $60,000 per coin at its peak. If you had invested just $1,000 in Bitcoin in 2010, you'd be a billionaire today. Literally, a billionaire. But here's what they don't tell you in those success stories. Bitcoin has also crashed by more than 70% multiple times. Entire fortunes have been wiped out overnight. People have lost everything. So which story is the real one? They both are, and that's exactly the problem. Let's look at real numbers. If you invested $10,000 in Bitcoin in January 2020, by the end of 2021, you'd have over $60,000. That's a 500% return in less than 2 years. Absolutely insane. But if you bought at the peak in November 2021, you'd have lost over 60% of your money by the end of 2022. $10,000 would have become $4,000. The volatility is genuinely stomach-churning. We're talking about 20% swings in a single day. Imagine waking up and your investment is down $20,000 before you've even had coffee. Then the next week it's up $30,000. This isn't investing. This is a psychological torture test. But let's be fair. Crypto has some real advantages. First, it's incredibly liquid. You can sell and get your money in minutes, 24/7. Try doing that with a house. Second, you can start with any amount. You can invest $20 if you want. Real estate requires massive upfront capital. Third, it's completely portable. Your wealth isn't tied to any physical location. And fourth, the technology behind it, blockchain, actually has revolutionary potential in finance, contracts, and data security. The question is, does that potential justify the insane risk? Because let's be crystal clear about something. Most cryptocurrencies will go to zero. We're talking 95% or more of all crypto projects will eventually become worthless. Even Bitcoin, the strongest one, could theoretically collapse if governments ban it, if a better technology replaces it, or if a critical security flaw is discovered. And here's something that should terrify you. Unlike real estate or stocks, crypto has no underlying value. A house has land and structure. A stock represents ownership in a company that generates revenue. Bitcoin? It has value only because people agree it has value. The moment that agreement ends, it's worth nothing. It's the ultimate confidence game. So, where does this leave us? Real estate seems safer but requires huge capital and creates major headaches. Crypto offers insane potential returns but could literally go to zero. What's the actual smart move? Here's my framework for deciding, and this is based on cold, hard logic, not emotion. First, ask yourself this question. How much money do I have to invest right now? If the answer is less than $50,000, real estate probably isn't even an option unless you're doing something creative like house hacking or partnering with others. Crypto becomes more accessible, but that doesn't mean it's right for you. Second question, what's my risk tolerance? And I don't mean what you think it is. I mean what you can actually handle. If a 20% drop would make you panic sell, you cannot handle crypto. You just can't. You'll buy high and sell low, which is how most people lose money. Real estate's slower pace might suit you better. Third question, what's my time horizon? If you need this money in the next 2 years, neither is ideal, but crypto is especially dangerous. Real estate is better for 10+ year holds. Crypto could work on any timeline, but the longer you hold, the better your odds of weathering the volatility. Fourth question, how much time can I dedicate to this? Real estate demands significant time and attention. Crypto requires constant learning and monitoring because the space changes daily. If you can't commit time, index funds might be a better choice than either of these. Now, here's what I actually recommend for most people, and this might surprise you. Don't choose. Do both, but with a specific strategy. Here's the portfolio approach that makes sense. First, build your foundation with stable, boring investments. I'm talking about index funds, retirement accounts, emergency savings. This is non-negotiable. This is your safety net. Second, if you have money beyond that foundation and you want real estate exposure, consider REITs instead of buying physical property. REITs are real estate investment trusts, basically companies that own and manage properties. You get real estate exposure with liquidity, diversification, and zero tenants calling you about broken toilets. You can invest with small amounts and sell whenever you want. Third, if you want crypto exposure, limit it to 5 to 10% of your investment portfolio maximum, and only invest in Bitcoin and maybe Ethereum. Skip the random altcoins promising to moon. 95% of them are garbage. Set it, forget it, and don't check the price every day or you'll go insane.
Fourth, if you do want to buy physical real estate, make sure you have at least 6 months of expenses saved separately. Can afford a 20% down payment without emptying your accounts, and have calculated every possible expense realistically. Don't use the optimistic numbers from real estate gurus on YouTube. Use conservative estimates and assume things will go wrong, because they will. Here's the ultimate truth that nobody wants to hear. Neither real estate nor crypto is a get-rich-quick scheme. Real estate builds wealth slowly through forced savings, leverage, and time. Crypto is a high-risk speculation that could pay off massively or go to zero. Both can work, both can fail. The difference isn't the investment, it's the investor. The people who succeed in real estate are patient, detail-oriented, and willing to put in work. They buy in good locations, screen tenants carefully, maintain properties properly, and hold for decades. The people who succeed in crypto invest only what they can afford to lose, resist the urge to panic sell during crashes, avoid scams and hype, and understand they're making a calculated bet on future technology adoption. Most people fail at both because they lack discipline, chase returns, invest emotionally, and don't do their homework. They buy real estate at the peak of a bubble because everyone's doing it. They buy crypto at all-time highs because of FOMO. Then they panic sell at the bottom and blame the investment instead of their behavior. So here's my final answer. If you want stability, tax benefits, and don't mind work and illiquidity, real estate can be excellent for building long-term wealth. If you want high-risk, high-reward exposure to potentially revolutionary technology and can stomach extreme volatility, a small crypto allocation makes sense. But for most people, the smartest move is a diversified approach. Boring index funds as your foundation, maybe some REITs for real estate exposure, and a tiny crypto position if you want to participate in that upside. Don't put all your money in either one. Don't mortgage your house to buy Bitcoin. Don't drain your savings to buy rental property. Build wealth systematically. Diversify across multiple assets, and focus on time in the market, not timing the market. The real question isn't real estate versus crypto. The real question is, are you disciplined enough to build wealth regardless of what you invest in? Because that's what actually matters. The investment vehicle is just the car. You're the driver. And even a Ferrari crashes if the driver doesn't know what they're doing. If you found this helpful, subscribe for more no-nonsense breakdowns of complex money topics. Drop a comment telling me which investment you're leaning toward and why. And remember, this is education, not financial advice. Do your own research, understand your own situation, and make decisions based on your goals, not someone else's hype. Now, get out there and build that wealth smartly.